Hey everyone, Meet Kevin here. Boy, oh boy, there is so much debate over the stock market, and I will tell you, there is one lesson. It doesn't even have to do with the stock market, but that can make you a multi-millionaire, and that lesson is what we're going to talk about in this video. It's probably the greatest lesson that I've ever learned. It is what made me a multi-millionaire before I ever even started making YouTube videos. I think it's easy to look at YouTubers and go, oh yeah, okay, they just made it to be a millionaire because they make YouTube videos and they got a bunch of subscribers or whatever. It's not the case. Sure, that's helped after the fact, but all that did was change a multi-millionaire number to another multi-millionaire. Like, whatever, that doesn't matter. The reason I want to share this story, and we're going to do it in sort of segue with Kevin style, is because I think it's so important that it's just a raw chat between you and I, because really, this is the most important lesson that I ever learned, and I owe it to make it super clear to you what that lesson is. So first, I want to talk about what it's not, and that's stocks. I have invested in stocks since 2008. I've studied stocks and financial reports since 2008. I remember in 2011 sitting in escrow on my first home and standing there looking at a stack of the Facebook earnings way back then, thinking, Facebook or Apple, while I'm trying to fix up a property, right? So, like, stocks, what I've learned, what's fascinating about stocks is you can have the best fundamental analysis in the world and be wrong in the short term. Long term, usually fundamental analysis plays out, unless of course the fundamentals change. Now, one thing to always remember about real estate analysis is the fact that with real estate analysis, you can actually know that homes are under market value. For example, if all of the comps in a neighborhood are selling for $400,000 and you can buy a fixer-upper for $250,000, and you don't have any kind of weird market movements where the market is sliding down and the comps you're looking at are like a year old or whatever. If you're looking at recent comps and you could get a property that's a fixer well under market value and the difference is less than the cost to fix up, well, then you're getting a good fundamental deal. Let's make that clear. If you need to take $20,000 to fix up that $250K house and now it's worth $450, just like all the others in the neighborhood, or $400,000, whatever, now you've profited not 150, but 150 minus 20 for fix-up. It's $130,000 of a net worth boost, which you can extract tax-free via refinance. This is why people always talk about the BRRRR strategy. That, of course, is buy, rehabilitate, rent, refinance, repeat. It's basically taking wedge deals, extracting the cash free from those deals, because you're buying properties under market value. And the reason you can do that fundamentally in real estate is because people overvalue how much work you actually have to do to get a property ready for rent. And that means you constantly have to be paying attention to stocks. And one of the difficult things with stocks is that you don't actually have control over the companies, right? So you're trying to analyze fundamentals on companies where corporate executives are actually trying to appease shareholders for the short term. So for example, in this morning's earnings call with Target, course members and I reviewed it, and going into detail on it, we noticed how Target basically, when you read in between the lines, tells us they don't have earnings power anymore, or pricing power anymore, and instead they need to cut their investments on consumer discretionary items and go really, really heavy on food and value items because people are transitioning to value and they're having trouble selling these discretionary products. But they don't tell you that bluntly. They kind of try to say, oh, we're getting more traffic and our focus is more traffic and our customers are so happy with what we're doing. We had too many employees getting distracted by too much inventory. And then you look at the cash flow statement and you're like, no, you had a negative operating cash flow because you bought too much inventory in the first 3 months of the year. You guys done screwed up. Yet you get executives who essentially try to manipulate that information so that hopefully it doesn't have as bad of an impact on the actual stock performance in the short term. And that's something that I also hate about stocks, because in the short term, you get so much divisiveness in stocks. It's almost worse than politics. It's, oh, look, here's some data that's negative. Oh, you're a fudster. Oh, that's stupid. You're not paying attention to this, or you're misleading with this. Or, oh, here's data that's bullish. Oh, you're a flip-flopper. Oh, you're missing this. Oh, you're not considering China. Oh my gosh, this is all terrible. It's you can never say anything right. And so what's fascinating is I've noticed that most people, because of all this noise, don't actually become multimillionaires from stocks. They might be multimillionaires who invest in stocks, and over the long run, if you return and compound 7% annually, that's pretty amazing once you're already a multimillionaire. But it doesn't do you much good if you have a portfolio of, say, $20,000 or $50,000. It really does you little good, and it's not going to get you to multimillionaire status unless you have serious, cojones of steel to get through all the noise and the craziness. The noise is there if you want to listen to it, but the more you listen to the noise, the more you tend to make portfolio mistakes. Because, again, stocks behave irrationally in the short term. You could have an amazing company with phenomenal fundamentals do terribly in the short term, and an amazing company with great fundamentals get overvalued in the short term. It's phenomenal. So what's the big lesson? The big lesson I notice goes back to the first lesson that I ever learned about investing. And it has to do with the fact that the things around me are actually what create millionaires. See, the New York Times found before the pandemic, and it's even more true now after the pandemic, that the greatest wealth builder has always been real estate. And that's actually why we have massive gender wealth gaps. It's why blacks are less wealthy than whites, for example, because whites own more homes. And that probably has to do with decades of redlining and discrimination and worse job opportunities and worse qualifying opportunities. But this isn't designed to be a political video. The point is that the average net worth of a homeowner is in excess of $200,000, whereas the average net worth of a tenant is somewhere around $5,500. And we're coming up on a property that I specifically want to drive by because I feel like I made a mistake with this property. And I regret that mistake because I have these fond memories of going through that property when Jack was my first son, who's about to turn 7 in about 20 days. Actually, in about 15 days. My first son, we walked through the property when he was 2 years and 10 months old. And this was a property that I made a big mistake on. And there's a big lesson to learn from this property. Because, see, with real estate, you don't have to play the noise of the stock market. You can. You could sell real estate, which I don't recommend you do. Now, I sold some of my real estate, but that's because I'm starting a real estate company, and I'm actually going to be going larger into real estate. So even though I might do something personally, that's not what I recommend. I don't recommend people copy me because I don't think other people, first of all, are starting with millions of dollars in the position I am right now, or are creating a real estate startup. Generally, I don't recommend selling real estate. And that's because real estate is a perfect way to become a multimillionaire. In fact, one of my employees is a W-2 employee, and they continue to buy real estate. Every chance they get, they buy real estate. They will end up being a multimillionaire working for me with no stress of the stock market or the noise of the stock market. And here's the house. The house is right here. This particular house is a house that I bought and I completely remodeled. See, it's got my famous diamond driveway. Those are our colors, the exterior colors. We didn't do all this landscaping here, but we did those windows. We did the wood repair work on the outside. We did the roof. And I'm going to keep going here because I don't want to be awkward and filming in front of what's now somebody else's home. But the lesson of that home is one that we can apply to everyone, and it's a mistake that I made. 2018, anyone could have bought that house. In fact, that's exactly what these folks did, with 5% down for $600,000. Now, a lot of folks are going to hear $600,000 and think, what, that little house, $600,000? That's insane. That's because you live in stupid California. That's crazy. People make fun of California all the time. And again, this isn't a political video. I happen to live in the best weather that exists in the country, which only a small sliver of the country can actually have. It's not my fault that the weather looks like this and it's 65 to 75 degrees every single day all year long. And it barely rains here, which also causes water problems. But then again, we have an idiotic governor that doesn't do anything about that. That's why I ran against him for governor. But oh well, that's beside the point. What's more important is that anybody could have bought that property with 5% down. And you might think, okay, 5% down, but Kevin,
And this is what's so fascinating about real estate, is the objections immediately come up. But Kevin, then you have to pay mortgage insurance. Well, that property with 5% down, you would have borrowed 95% of that property's value. 5% down represents $30,000. You didn't have to fix it up because I already fixed it up. I sold that property. I sold that property to somebody who put 5% down. They spent $40,000 to control that property. That property today is worth $800,000. Now, while I don't believe that's sustainable, and sure, real estate prices can and they will go down in the future. In fact, we might be on the precipice of real estate prices going down, maybe even as much as 20%. Even if it goes down 20% from $800K, it's still worth $640,000. Which, what's incredible about that is, if they bought the property for $600,000 and it's worth $640,000 and they put $40K into it, down payment and closing costs, they basically spent no money on the property. They own the property essentially for free. Now, of course, the beautiful thing about real estate is there's very little debate. Somebody who holds that property for the next 30 years in a high quality area, even considering maintenance costs and fix up over time, will build a lot of wealth. And that is the key to becoming a multimillionaire, is moving into that kind of property with 5% down, living there for a year or two, and then guess what? After you live there for a year or two, maybe you even live there for 5 years, you move and you turn it into a rental. The payment on that property at the time was probably somewhere around $3,000. They could rent that property out right now for $3,800. $3,800. It's kind of insane. Rents have gone up a lot. But they would have a positive cash flow a few years after buying it. And that's not necessarily to say that that's always going to repeat itself. Even if they had a slightly negative cash flow of, let's say, even a couple $100 negative, okay, that's $2,400 a year. Can't afford to invest another $2,400 a year into real estate. Come on. The objections people have for real estate are really sad. But over the long term, what's phenomenal is that that property and that person's equity will grow so much faster than the interest that they pay. And that's because they put $40,000 into a property that now has probably somewhere around over $200,000 of equity. And so they basically turned, if their net worth was all of the cash they put into it, if their net worth was $40K, they 5X their net worth. It's $200K. They do that again with another property in a few years, or now. Then they do it again a few years after that. They'll likely be a multimillionaire within 10 to 15 years. I highly believe that somebody buying real estate every 3 to 4 years will be a multimillionaire easily within 10 to 15 years. The same can't be said about the stock market because there's so much noise. And so what was my big mistake with that property? In my opinion, in 2018, I should not have sold that property. I think it was a mistake to flip that property. I called it the YouTube flip, though, and if you type into YouTube, Meet Kevin YouTube flip, you can actually see the series. It was kind of during a little bit of a challenging time because in the spring of 2018, mortgage rates skyrocketed about 1%, and we had sort of the noise of the market and the panic of the market and a temporary reduction in prices in the summer of 2018, which is quite remarkable because that's when the Fed started becoming aggressive, kind of like what we're seeing now. But I think the biggest lesson that everybody should really be internalizing is, what can I do to get into real estate? What can I do to build wealth with real estate? And the answer is, get started with your first home. The objections that come up are usually, oh, but then you have mortgage insurance. Okay. So after a few years, after you build equity, especially if you buy it right, or just over time prices go up, you can get rid of your mortgage insurance. The average amount of time that someone has a mortgage is 7 years. But most people get rid of their mortgage insurance within 3 years. So calculating mortgage insurance as this 30-year cost is ridiculous. It's a flaw. Most people look and say, oh, but Kevin, but what if the foundation is broken? Or what if the roof is damaged or the sewer is broken? You can inspect for these things. Foundations aren't broken without external evidence. Roofs aren't broken to the point that you can't see it when you're walking on it and inspecting it. Plumbing isn't broken to the point that you can't stick a camera down a vent pipe and inspect the sewer lines under that house. In fact, that's exactly what we did, and we replaced all of the sewer lines in that house. So the buyer there has a new roof, has new windows, has new sewer lines, has a new electrical system. They have everything. And so what's going to go wrong? Oh, you have to replace an appliance every few years? Who cares? You know, you don't have that concierge service of a landlord doing that for you, but the reality is a landlord isn't going to do what you expect anyway. Most landlords suck. Most landlords won't even fix things they have to fix, let alone provide you a concierge service, which some people think, oh, but I could just call my landlord and get a new dishwasher. Really? You want the dishwasher your landlord's going to give you, or do you want to buy your own and actually build wealth in doing it? So, look, everybody knows at this point that, I have programs on building your wealth through real estate linked down below, but I just, this video isn't designed to pitch that or the coupon code expiring on the 26th. It's to suggest that my biggest mistake was, the biggest lesson, the mistake in this video was selling that property, but it was one of my biggest mistakes. I've made much bigger mistakes. My biggest lesson was buy real estate. Because over the long term, if you buy real estate in high-quality areas where people want to live, you gotta be careful maybe with the Zoom towns, because we've got that Zoom town phenomenon where a lot of people have moved to, for example, Boise, Idaho, or whatever, and now the Zoom towns are seeing real pain in real estate pricing, and that pain is probably going to continue as we sort of get a reversal of that effect. But the biggest lesson is get into real estate and own real estate. Don't try to time the market with real estate. Get away from the noise of stocks. Get into owning assets that over the long term will appreciate, that you can control with the bank owning most of the debt. And the beautiful thing is, when the bank owns most of the debt, you're not taking the big risk. The bank is. And that's not to say you don't want to take risk mitigation steps. Hey, it's not to say you don't want to mitigate your risk. Here's how you can mitigate your risk the same way Lauren and I mitigated our risks on our first property. We looked and said, okay, the payment on this property is $1,950. That was our first property. What do we do to mitigate our risk? Okay, well, worst case scenario, can we together take minimum wage jobs and afford $24,000 a year? And the answer to that is, yeah. We could. Even when minimum wage was $9. Like, we could even take a minimum wage job and a second minimum wage job each if we needed to. We would make that payment because we didn't want to have the 7 years of no financing anymore, which is what you end up with if you go through a bankruptcy. Although I think that's even been softened to 4 years now, so bankruptcy isn't even that evil anymore in the lending world. They just want you coming back and buying more homes. It's kind of crazy. That was our worst case scenario. But we're like, but why would that happen? We wouldn't have to float the whole thing. Unless, of course, we put a tenant in and had an eviction. But this is where people write comments all the time. They're like, oh, I don't want tenants and toilets. Yeah, you don't want tenants and toilets because you're listening to people who have rental properties who aren't experienced professional property managers who don't know what the hell they're doing. So what happens? They end up renting to tenants with terrible credit scores and terrible assets and terrible qualifications. And so, yeah, no surprise, the tenants stop paying rent. And then they have to deal with tenants and toilets and the nightmare of that. But Lauren and I, we had over $20 million of real estate, over 22 rental properties rented out to individual tenants. And what did we find? We found that our property management was maybe 20 minutes a week of work. I mean, it was a joke. We generally joke that it was about a minute per tenant per week. That's it. Like, seriously? That's not that much work. So that was at least our experience, knock on wood, and but we think that is a replicatable model if you rent to qualified individuals. Even if you rent slightly below market value, we'd rather say, okay, what if we rented out the property for $1,600? Would somebody rent the property? Of course somebody would rent the property for $1,600. In fact, if we had a payment of $1,950 and let's say we had expenses of a couple $100 on top of that, let's say our payment was $2,200 with expenses and repairs and everything, and we're just like, please somebody just rent it for $1,600, like just rent it for cheap, right? And we get somebody with like an 800 FICO and the best quality person ever. Okay, so now our negative cash flow would have been, in this worst case scenario, $600. 600 times 12 is $7,200. What, we would have gone bankrupt over $7,200? Get out of town. Like, most of these risks that people feel about real estate are imaginary. And that's why, again, the greatest lesson that anybody watching this video could recall and remember and take away is that if you have an objection as to why you're not getting into real estate, ask yourself why you have that objection. And ask yourself about, maybe you're wrong. Maybe you should be getting into real estate because maybe real estate is the surest way to wealth. And it's one where you don't have to be so concerned about the day-to-day noise. The market's always going to shift. There are always going to be changes in the market. But don't worry about that. Buy real estate. Don't wait to buy real estate. Get in and wait. And subscribe because we're going to be bringing a lot more real estate content, especially since we've got a huge real estate startup coming up that I'm so excited to share with the world. And I might actually start posting some more detailed videos about it. Let me know in the comments if you want to hear that. It's sort of a teaser, but yeah, attorneys are taking a whole lot longer on paperwork than I expected, but I want it to be perfect for when we launch, so it's okay to wait a little bit longer for perfect paperwork. But anyway, thanks so much for watching. Get out there, buy real estate, and we'll see you in the next one. Bye.